This week I drew a line on a chart. I called it a stop and then found out it actually wasn't one. The lesson I'm taking from the week came from a mistake I'm actually still sitting in. Here is the honest version. It has been a risk-off jittery tape most of the week, which matters for a couple of these positions. Let's start off with Honeywell. I had a covered call on this stock, but there's a corporate action coming, spin-off and some share restructuring, which turns a clean liquid option into an awkward adjusted one. The decision I made was to close it before the deadline while it's still clean, rather than getting trapped managing something liquid after. So next is Adobe. I placed a short on this stock, which it's a fundamentally fine company, but it broke down technically. I shorted based on price and sentiment, not the business itself. While I was recording the walkthrough, I caught a possible bounce off support and I stopped the recording mid-flight. And now I was not going to publish a thesis that I was quietly contradicting myself. So I worked through the reversal, whether it was a reversal or a dead cat bounce. I judged it was a dead cat bounce. Slowly selling isn't buyers showing up. The breakdown had conviction, the bounce didn't. This was around this point here. So a little lesson learned. A bounce against your position isn't automatically your thesis breaking. You test it against the evidence. So we move on to CRM. This was a defined risk structure. It was built to pay if the stock settled around a level. It dropped fast, so the position was red early on. But red early isn't wrong. The structure rewards patience when it reaches a level. The thinking, if it breaks a level, I will roll down to a lower target or switch to a structure that rides a slide down. Most of the trading this week wasn't actually trading at all. It was what I passed on and some of the reasons why. So some of them was live cattle. So I was considering taking a short here, added the resistance level that I previously defined, but there was no clean entry, so I didn't take it. Right thesis, but still a no for me. Next was RTX. I had a defined short mapped out, but it didn't reach that level, so I did not chase it. Next was Intel. An alert fired on a breakout out of a consolidation zone, but it immediately fell back into this zone, so it was a weak breakout, so definitely not a buy. GLW, interesting breakout. It was on real volume. Money seems to be rotating into here, but I didn't force it on the risk off tape during the week and still managing exits on existing positions. Still on the watch list, but not chasing it. An honest miss, I saw the index pushing into overhead resistance, but I never turned it into a hedging plan. The gap between seeing a setup and acting on it, that's a real weakness that I spot in myself. So I'm naming it and definitely not hiding it. So something I want to come back to is around Tesla. There was a line that broke. It closed below the level I'd drawn. I didn't take the exit cleanly. Not because the thesis changed, because a loss actually had grown past what I had mentally signed up for. The rationalizations I caught myself reaching for, it's the whole market that's dragging it down, not the stock itself. I'll restructure. It's too big to take now. The sharpest part, I'd already spotted the stock underperforming its own index. Evidence it was weakness in the name, not just the market. I found myself discarding my own evidence because the comfortable story let me hold. I called it what it was, a struggle to take a loss, not a strategy. So the lesson learned, an invalidation level is two numbers, not one. The price and a loss at that price. And you accept both before you enter. My line was a real chart level, but I never priced what hitting it would cost me. So when it arrived, the loss was past what I would accept, and a stop I hadn't priced became a position I managed instead of exited. Cutting a loser was never the failure. Letting a planned loss become an unplanned one is. Week ahead, Corning is the one I'm watching. If the tape settles, that breakout on real volume sits right where money has been rotating into. But it stays on the list until it gives me a clean reason to act, not a chased one. So in closing, the hard part of the week wasn't the trading itself. It was staying honest with myself about the real reason I wasn't taking the exit. That self-honesty is the system. Nail that and the rules enforce themselves. Posting this whilst I'm still sitting in this mistake. No gloating, no hindsight gloss. That's the whole point. That's the rep that compels. If you want the framework behind these trades and the trading plan template that I use, it's free in the community. Links in the description.